looking at rate cuts in context of where the US economy is at that point in time. So we look at business cycles and we look at rate cuts during US business cycles. Now, all the green dots that you see in this chart are places where the Federal Reserve has cut rates. And the blue line that you see in this chart is the OECD CLI. The OECD runs something called the Composite Leading Indicator Index. You can find details here on the right side of the slide. There are three things you must remember when you read an OECD CLI index. Any number that is above the 100 threshold tells you that GDP for that country is above its trend. So for the US, the number seems to be almost exactly at 100, indicating that GDP is at trend at this point in time. Second is if you see the line of the OECD CLI trending upwards, which means the month-on-month is positive, an upward trending slope of the OECD CLI indicates that economic activity is getting better and better. By the converse, it means that if the economic activity is getting worse and worse, the slope will actually start moving lower. Now, the third and the most important part is the OECD CLI is an indicator that tells you where the economy would probably be 6 to 9 months down the line. So it is very useful in identifying turning points in the economic cycle. If you analyze the OECD CLI and then look at rate cuts, a very similar point in time that you can find is the 1998. It was an external reason where the Federal Reserve cut rates because there was a currency crisis that was happening. If I recall right, it was ruble related, Russian ruble related. The second phase where it was close to 100 was the late 1980s, where the Federal Reserve started rate cuts. Now, this situation where the US is in probably can be linked to a 1998. So what we're trying to say is that the rate cuts that the Federal Reserve is expected to deliver next week could possibly push up economic activity like it did in its short 1998 rate cut cycle. And therefore, what we are trying to say is the rate cuts that the Federal Reserve is likely to deliver next week can be called insurance cuts or mid-cycle adjustments, as they were called around the 1995 cycle.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.